Okay, what's going on, everybody? This is Bakari So Real, and I'm back again with a So Real trading video. Today is day 56 of trading gold, XAUUSD. We got the charts pulled up. We're gonna get straight to it. Make sure you hit that like, that subscribe button. If you're new to the channel, for those of you who've already been watching, I really appreciate you guys. Let's stay consistent. Let's keep this going. Comment below. Let me know how trading is going for you guys. Let me know how my chart analysis is going for you guys and what you guys think about it. For those of you who are new, go watch my previous videos because there's information from my previous videos that still relate to today. Because we're staying focused. We're on a 450-day plan, and today is day 56, right? So let's get straight to it, man. We got the chart pulled up for gold, and this is a daily time frame, right? This daily time frame. So a lot of you guys might think that this is scribble scrabble or just regular drawings that don't make sense or anything like that. But I tell you for sure that every drawing that you see on this chart makes sense, right? Everything on here makes sense. That's why you have to watch my previous videos to catch up, right? Sometimes to catch up, I do try to uh, talk about everything. I will try to talk about everything again. In this video, I'll try to break some stuff down that you see here. But for the most part, you guys have to subscribe, turn on your post notifications, so that way you guys can catch up. If you don't catch up by watching the previous videos, you could catch up by watching the next videos like day 57, day 58, 59, day 60, day 61, because I'm gonna continue to post, right? So and we're going to continue to monitor this chart, right? As you see right here, gold has closed out for the week at 4,017 or 4,018, right? We are currently in profits. We're currently in profits for a buy position, even though that you see right here, the market has not crossed our entry level on this long position that I have. So I have some long positions that are pending, and they're pending because we're waiting for gold to cross $4,050. Once gold crosses $4,050, then we know that that's most likely a bullish scenario, right? We know that most likely the price will be going up higher, right? Um, we're looking to catch a target for a a lower high. We're looking to catch a lower high. So a target for a lower high would be anywhere between 420, 4,200 and 4,500. So between 4,200 and 4,500 is the target that we're trying to catch, right? Once we hit those targets, we'll close partial profits, and we'll let a little bit left run, right? Because we don't know how much higher gold can go, because if gold was to take off higher for a higher high, for an all-time high, gold, to me, in my opinion, should have took off back in May or June. We should have been taken off, right? But you see, this long position never happened. We never came up here, right? We continued to come down into our red zone. We came down following this support zone, which it all makes sense. At the end of the day, it all makes sense how we came down to the support zone, as you see back here from 2025, the October low. The October low in 2025 is the support zone. And it makes sense that we came all the way down here to touch the support zone, right? A lot of people have been saying that gold is going to push down lower and that we're going to see $3,800 gold or $3,700 gold. And I'll tell you guys right now that when I zoom out, of here, you see that yes, our overall direction is for us to come down and touch around 2,500, around 2,500 to $2,000 is our overall direction, right? Now, this is not financial advice. Nothing I say is guaranteed. This is just for educational purposes only, and it's for my opinion on my market analysis, right? But you see these three lines right here. And for those of you who are watching my videos for the first time, this is important for you to know that gold has never came down to retest this $2,000 consolidation low that was going on for 3 years. Gold was consolidating at the price of between 1,800 and 2,100 for 3 years. creating a strong support zone. At first, it was resistance, but then once gold broke out of the resistance in 2024, gold never came down to retest the support zone. It never did. It went up, and this white line shows an example that it should have came down and retested, but it continued to go higher. This orange line shows an example that it should have came down to retest and create a proper bottom structure, but it continued to go higher. And then this blue line shows that it should have came down to retest, but it continued to go even higher. So now that gold has went so high over the last 2 years, gold has created a bubble. What happens with the bubbles? The bubbles pop, they inflate, they start going down, right? So now we have the reversal. If I take all this off, now we have the reversal starting for gold. So now it's less likely a chance that we'll see all-time highs before we come back down to retest this bottom support area down here, right? We can come back up to create like a double top, or we could come back up to create a lower high, or we can even go up to create a higher high. But most likely but no matter what, my opinion is that no matter what we do, we know that we have to come down. So as we continue to go, if I do believe that we're going to bounce from here. I do believe that we're going to bounce from here. I don't think that we're going to drop down to 3,300, which 3,300 and 3,400 is the next support zone area. This is the next support zone level right here. I do believe that we're going to come back up to rally. We're going to come back up for a rally. Once we come back up to around 4,500, I just want to hit my target of like 4,500. Once we come back up to like 4,500, I'm barely going to be trading. I'm just going to be looking to catch that big sell position. So either we're going to keep going higher and I'm just going to barely trade. I'm going to sit on my hands. I'm going to stack. But I know even if we get to like $6,000, I believe $6,000 is going to be the top for sure. $6,000 or $7,000. And then we're going to drop, right? And then we're going to start coming down. Now, the higher we go, the longer it's going to take for us to come down, right? The higher we go, the longer it's going to take for us to come down. Now, when I pull this back up, you see that this blue line shows that we should be coming down to touch 2,500 by February of next year. So by February of next year, the blue line shows us coming down to touch 2,500. The red line, if we do reach all-time highs, if we do go to all-time highs up here, I'm gonna have my sell positions up here at the top around $6,000. If we do go up to all-time highs, it's gonna be a hard straight crash down. And I believe that we'll come down to touch 2,500 by April of next year. By April of next year, we'll be touching 2,500. So next year, we're looking to see we're looking to see gold bottom out. I think gold's going to be bearish starting by the fourth quarter of this year. By the end of this year, gold is going to be bearish, and we're going to be following the bearish downtrend for gold by the end of this year, and we're going to be following it into next year. All right. Today is day 56. We're just staying consistent. We're just monitoring the charts. We're not getting emotional. We're not getting stressed out. We're not over leveraging. We're not risking more than like 10%. I try not to risk more than 10% a day whenever I trade and things like that. Right. So make sure you guys are using proper risk management. If you guys got questions, post in the comments, and things like that. Right. But yeah, we are currently in a buy position with stop losses at 37.70. And all right, let's go to the weekly time frame. And we'll be almost done with this. All right, so for the weekly time frame, we'll take all this off. So boom, so the week just finished. We just finished off with a red candlestick. A red candlestick for the week, a bearish week. So this week has closed out to be bearish at the price of $4,018. So there's two good things that I see here. One good thing is that this week failed to break below support. So this week did not break below support. It failed to break below support, which means buyers are strong right here. Buyers are strong right here. And if you look at back testing, if you look at previous history, back in 2025, buyers were strong at this level as well. And what happened at this level? We went all the way up. We went all the way up, right? So buyers are looking strong right here. We have numerous amount of wicks, and this week fell to close below. Another thing is that this week didn't even tap below. Like we didn't even see a wick come below. So even the wick didn't make it, right? So this week didn't make it below the most recent low of 39.40 at all. So that's a sign of bullishness. That's a sign that the market is looking to go up higher. That's a sign that buyers are strong in this area. Um, um, what was I going to say? So the next thing is that I believe that next week we can possibly still drop below 3,900, drop below $4,000 maybe for one more wick. But this is a good trade. Next week will be a good trade to buy and have your stop losses at 39.40. Have your stop losses at 39.40. It's a good trade. Now, if the market drops and the market crashes below 39.40, okay, you might lose that trade. But that doesn't mean that that trade was not a good idea, right? If we buy from here starting next week and we lose this trade on the buy, we lose this trade on the market dropping, that doesn't mean that our idea was not a good idea. You know what I'm saying? You can't control everything. You can't control every scenario. So what you do is you use proper risk management. How much are you guys willing to risk is the question. How much are you willing to risk? How much are you willing to lose if the price does drop below 39.40? Right? That's the question you got to ask yourself. You know what I mean? Are you willing to lose $100? Are you willing to lose $1,000? If you're willing to lose it, then this is a good time to place a buy signal. The last 2 weeks, here's another example. Here's another thing. The last 2 weeks have been red, have been bearish weeks. The week before that was green. And then the weeks before that, it was bearish. It was bearish. 1, 2, 3, 4, 5, 6, 7. We had 7 bearish weeks before that, before our first green week. And then we just had 2 bearish weeks again. Right? Another thing too is that you guys see the gap right here on previous history. So back in 2025, you guys see the gap right here between 4,100 and 4,080. There's a gap. What happened with that gap? That gap got closed. That gap got filled. So there's another gap right here now. It's a chance that that gap can start to get filled for next week. There's a chance that that gap can start to get filled for next week. Right? And our targets is just going to be 4,200 to 4,500 is going to be our targets. 4,200 to 4,500. That's going to be our targets. All right. So that's pretty much it for this video, man. Oh, last thing I'll say, now that I got this all pulled up, last thing I'll say is that, yeah, you see that we're at our support zone. So boom, now you guys see, for those of you watching my videos for the first time, you see that all my markups make sense, right? So I have these markups for support zones. So boom. If you look closely, you'll see that this week did not close, the candlestick did not close inside of this support zone range. The candlestick closed above it. The candlestick closed above it. So that means this support zone is filled with strong buyers and weak sellers, strong buyers and weak sellers, right? Another thing about this support zone and about the market not closing below it, is that there might be sellers waiting for the market to come down in this range for their sales to open, right? So a lot of people don't talk. A lot of people don't talk about both sides of the coin. There's two sides to the coin. There's two sides to a support zone. There's two sides to these ranges. There's one side that shows buyers are strong in this area, and then there's one side that shows sellers are placing sell stops in this area, which means sellers are waiting for the market to drop to this area for sales to open, for sales to open, right? So the market can pick up on all that, right? So sometimes if there's more sellers in this area, the market might tap here, but the market might not close here. The market might tap here to take some of that liquidity from the sellers. And that's probably what's happening is there's probably more sellers in this area waiting for the market to drop so that way their sales open, right? And this is good information that I'm giving you guys. I was almost about to end this video right now before I just said all that. So shout out to you guys. Shout out to you if you're still watching this video right now, because I just gave you some good information, right? So we know that this candlestick closed above 4,800 and that there's a possibility that there's more sellers waiting for the market to drop so that way they can open their sell positions in this range, right? So if the market opens up and starts going up higher, then that means the market is pulling liquidity from these sellers. The market is taking money from these sellers, right? And then I'm still giving you guys good information in this video, man. I'm still giving you guys good information in this video. And then, and that's the last thing I'm gonna say, and I'm gonna have to end it because I'm gonna have to end it. And I'm gonna drop, and I'll be back for day 56. Okay. But not only are there sellers down here waiting for the market to drop so that way their sales can open, think about all the sellers that sold up here at 41.80 after this green candles, after this green week back in the last week of June. Think about all the sellers that sold up here who had stop losses at 4,200 or 4,300. There's sellers who have stop losses up here. There's sellers who have been selling. There's sellers who have been selling since there's sellers who have been selling since 4,300. Since we came below, since we dropped below this invalidation line back when I was dropping videos during the day 30s or the day 40s, I was talking about this invalidation line. And there's sellers who have been selling since the market dropped below this invalidation line. Their positions are still open. They're still in profits. So the market not only is pulling liquidity from this zone, but the market is probably going to go back up and take liquidity out for these people who have not closed their positions, for these people who are still looking to sell. I mean, who are still holding their sell positions, right? For people who are still holding their sell positions. All right. And then there's people who have buy positions up here. There's two sides to these ranges. There's two sides to these zones, right? There's people who have buy positions up here and waiting for their buys to activate. So the market might come up here, take the sellers out and activate the buyers and then drop again to take the buyers out. You get what I'm saying? You get what I'm saying? So that's how you got to think. And after that, you just play a reaction game. After that, you just play discipline, proper risk management, right? All right. So yeah, man, shout out to you guys. If you guys watched this video all the way to the end, I want to wish you guys nothing but much love, much success, much abundance, much prosperity, much joy, much happiness, all that, man. Take care of yourselves. Stay out of trouble. You know what I mean? Don't spend too much money this summer. We have to lock in this summer. A lot of things are going to be taking place real soon, and you guys need to be prepared for it. All right. And just enjoy yourselves, man. Relax. Have a good time. And I'll see you guys on the next video. All right. Signing out.